Hi guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So it has been seen that many of the guys who trade are not sure about the trade executions. Okay, in the sense that they're not sure about the various type of order types they should be using in various scenarios. Okay, I'm not going to discuss the various order types as those are the very basics of trading. If you are trading, then it is expected from you that you should be knowing about it, and if you don't know about it, go ahead and learn it. The resources are numerous. Okay, they are spread out on YouTube and Google and stuff like that. Okay, so in this video we will discuss about just two order types and their practical implementations. Okay, so the trade execution is one of the most important factors that can decide many things when you are making a trade. Okay, just like your entries, stop losses and exits are very important, the type of order using which you are trying to make the entry and exit is also important. Okay, so in this video we will talk about only two order types, the market order and the limit order. Okay, so the first thing first, what are these? Market order is a type of order which you use to make entries and exits at the market price, and limit order is a type of order wherein you set a limit where you set a limit price and your trade will not get executed unless and until that limit price is reached. Okay, one limitation to the limit order is that it will not take the future prices. So let's say a script is trading at 505 rupees and you anticipate it to be going up further. Okay, you cannot set a limit order at 505.50 paisa, which is a future price. Okay, the system will just not accept it. Okay, so the limit order has to be placed at a previous price point, any price which is lower than the current market price, and the current market price is 505. Okay, so the same applies when a script is sliding down. Okay, now the next question arises, which one should I go for? Should I trade with limit order? Should I trade with market order? What is it? Okay, so the answer for sure varies, because when you are into day trading, the scenarios vary. Okay, so we cannot be stubborn on the fact of using a specific kind of order type. Okay, let me give you some perspective taking my example. I always use market orders to make my entries and limit orders to exit the trades. Okay, now when I'm using market order to make the entries, it's not like I see a stock zooming up and I suddenly make a market order entry. That can be lethal, right? If the entry is taken at the top of the move and once my order is executed, if I see that the stock price starts sliding down, then I'm stuck, right? So when I say I use market order to take the entries, I'm very sure of the point of my entry. How I'm sure about the point of my entry? That is by my technical analysis. Okay, so in day trading there will be slippages, but too much of slippage is not acceptable. Okay, for example, let's say that you are an EMA fan, an exponential moving average fan, and you prefer to take long positions once the price crosses and closes above the 20 EMA. Okay, now remember, this is not a strategy that I am discussing, it's just an example. Okay, so what I mean to say is you are using a technical of 20 exponential moving average. Okay, and you prefer going long only when the candlestick breaches and closes above the 20 EMA. That is when you go long. Similarly, you go short when the candlestick breaches the 20 EMA in the downward side and closes below it. Okay, so when you use market order, you need to make the entry just when the price breaches and closes above the 20 EMA and not when it has gone much above the 20 EMA. That will be a wrong entry if you use a market order in that scenario. Okay, I hope you're getting the point. Now let's jump to the limit order. Let's say that a stock is trading at 505 rupees and you want to take a long position since all your technicals are indicating that the stock price might go up further, but you feel that it will retrace back to 502 rupees 50 paise, and that's the point you wanna initiate your long position. Okay, so what you do is you put a limit order at 502.50 rupees, but unfortunately the stock kept moving up without retracing back. So here you are missing the opportunity, right? Your technical analysis was right because the stock is moving in your expected direction, but your entry and your decision making was wrong. In this case, you would be right if 505 rupees would have been far away from your line of decision, and your line of decision was the 20 EMA. Okay, so since the price has already gone up much higher, you are expecting the price to retrace and then move up again. And here your thought process is not to make an entry at the top of the move, which is right. But in the same scenario, you would be wrong if 505 rupees is very near to the line of decision, that is the 20 EMA, and you still want to enter at a limit price. Okay, so you need to be very fast and flexible to take up the decisions when you are day trading. Okay, so there's always a negative and a positive side of everything that you do in trading, so do it with utmost care. If you see that your entry falls in line with your technicals, then enter with a market order. Even if there is a slippage, it should not affect you much. Okay, and in inverse situations wherein you see that the entry point has surpassed according to your technicals, okay, it's always good to set a limit order and wait for the retracement to happen. Okay, so this was about your entries. Okay, now let's come to the exits. While you exit a trade, I always recommend to use a limit order, okay, to make sure that you don't miss out on your profits. You can always keep changing the final price point to book depending on the price movement, and even if you're booking a loss, use limit order to control your losses. Okay, what if you see that you are in loss and you decide to come out using a market order, and by the time you place the market order the script gave a vertical fall? Then the losses will be huge, right? It happens, right? It happens all the time in the market. Okay, so here also you need to be fast and flexible and reactive to save your capital. Okay, now let's move on to a simple chart. Okay, this is a Cipla's chart, nothing specific. I just took it randomly and I drew a 20 EMA here. Okay, the blue line that you see here is the 20 exponential moving average, and you follow the technicals wherein you go long if the candlestick breaches the 20 EMA in the upward direction and closes above it, and if you go short when the candlestick breaches the 20 EMA in the downward direction and closes below it. Okay, these are the technicals that you follow. Now again, a disclaimer, this is not a strategy. This is not a strategy at all. I'm just giving a very simple example. Okay, so this as an example, this is the strategy that you're using. Okay, now see what's happening here. Okay, let me make it a bit bigger. This green candle has breached the 20 EMA in the upward direction and it has closed above it. Okay, so once this candle is completed, you will take a long position when the next candle starts forming. Okay, you took an entry here. Let's say you took an entry at 503.55 in a worst case scenario. Okay, you are taking a market order entry. You're taking a long position using a market order. Okay, so let's say for example it took the entry at 503.55. okay, and you want to place a stop loss somewhere at the swing low. Maybe swing low is at where 501.55. so 501.55 and 503.55, it's 2 rupees. Okay, so for a 500 rupees script, a 2 rupees stop loss is a very decent stop loss. Okay, so very well you can go with a stop loss of 501.55, and your order was executed in the long position at 503.55. okay, and you anticipate the script to be going up. Now in this kind of scenario, when you see that the technicals are matching and your entry point is very near to the 20 EMA, you can very well place or go ahead with a market order. There is no point in making a limit order here. There's no point in placing a limit order to take an entry here, right? But let's say for example you were doing some work and you opened Cipla at around 1:10 in the afternoon, and you see that the move has already happened, and it was a big move, right? It has gone far away from the 20 EMA. Will you place a market order here and go long? The answer is no. That would be a risk because you never know whether it will go up or not. I mean, the only thing which you can do is anticipation, right? But what if the anticipation goes wrong? So it is always very important for you to be at the safer side. So in scenarios like this, wherein you see that the price has already gone up, already gone much higher than your decision making line, it is always good to use a limit order in this case. So where will you place a limit order? You will place a limit order somewhere just above the 20 EMA. Okay, because here the 20 EMA is acting as a support. So you are anticipating that since supply has already made such a big move right from here to here, it might be the case that it might retrace for some time. Okay, and that is the point where your order will get executed. Okay, the limit order that you have placed in the long position will get executed, and then you anticipate the stock to be again moving up since it is in an uptrend. Okay, so in such scenarios wherein you miss the move and when you see that the price has gone much higher than the 20 EMA, it is always good to wait for the retracement to happen and to use the limit order for your entries. Okay, so I hope you got the gist of it, where and when to use a limit order for your entries and where and when to use a market order for your entries. Okay, and as I said, while exiting the trade, when you are about to book your profit or when you are about to book a loss, I always recommend to use limit orders. Okay, never go with market orders because the slippages can be really high. Okay, so yeah, so I hope this helps, guys. Okay, and I hope that now you should be in a position to decide whether to use a market order or a limit order, and when to make an entry and exit, and like whenever you are making an entry exit, which order type you should be using. Okay, that is what I meant. Okay, so yeah, and as always, I would request you to like and subscribe to my YouTube channel, and also please join in my Telegram channel, the link to which you will find in the description section. Okay, and I will see you all later. Hope you all will stick back. Happy trading. Bye bye.